The big hedge funds managing billions of dollars just posted their activity for the second quarter, and billionaire Stanley Druckenmiller has been really active. In this video we'll see what stocks he bought for the first time, which positions he completely sold off, and what are his favorite AI stocks as he placed a massive bet on AI.
If this is a secular move, you just don't have 10-month moves. That's not how it works. Even the dot-com bubble lasted 2.5 years.
Moreover, we'll see what Druckenmiller believes to be the next Amazon, and lastly, what are his top 5 holdings, since these combined represent more than 53% of his portfolio, or approximately $1.5 billion.
My idea of risk control is a little non-conventional. I like putting all my eggs in one basket and then watching the basket very carefully.
But firstly, who is Stanley Druckenmiller and why should we care about his stock picks? He's a billionaire who made most of his money from working as a trader for George Soros. He has a surreal track record, as it is said to have made more than 30% return for 30 years without a single down year, and now he manages his own money in the Druckenmiller is famous for concentrated bets, as we'll later see that his top 5 positions make up more than 53% of his portfolio, and his top 10 positions make more than 75%. Personally, I like this style of investing, as it said that big bets will help you make money and diversification will help you keep it.
If you really know businesses, you probably shouldn't own more than 6 of them. I mean, if you can identify 6 wonderful businesses, that is all the diversification you need, and you're going to make a lot of money.
Moreover, the greatest investor of all time, Warren Buffett, has the same approach, with half of his portfolio being invested in Apple stock. But before we see what Druckenmiller bought, let's see what major adjustments he did to his portfolio, especially for some of his AI stocks. Firstly, Druckenmiller had 4% of his portfolio in Google, which he completely liquidated. Even after Google's cloud business finally became profitable, it seems like the company's advancements in AI just didn't convince him. As a reminder, Stanley Druckenmiller is very bullish on AI, as he believes it might be really transformative.
I do believe, unlike crypto, I think AI is real. It could be as transformative as the internet. It's a huge thing.
Selling Google might be because he sees Google losing the AI race to other players like OpenAI. Next up, Stanley sold mining company Freeport as well as semiconductor company AMD. Honestly, the sale of AMD is surprising, especially given the immense growth potential coming from generative AI. And the reason why he sold AMD might have to do with its main competitor Nvidia. You see, the selling of AMD generated around $37 million that Druckenmiller used to buy more stock of Nvidia. He increased his Nvidia position by 20% by buying around $67 million worth of stock. Moreover, Druckenmiller also increased his position for a few other stocks. Most notably, he increased his stake in healthcare company Option Care Health by $116 million. This is an infusion therapy leader with good revenue prospects. Although the revenue is estimated to only grow around 9% in 2023 and 2024, Option Care seems to be generating solid cash flows with a free cash flow margin around 15% in the second quarter. Next, Druckenmiller put $94 million in T-Mobile. T-Mobile has been an underperformer in the first half of the year, so he sees better days ahead. Next, let's look at the new positions that Druckenmiller opened. Firstly, General Electric is now around 2% of his portfolio, or around $80 million. This blue chip stock has seen one of the most impressive runs in 2023 with a staggering return of 72%. The power generation giant just had 2 solid quarters with revenue growing 14 and 18%. Secondly, Druckenmiller put $42 million into Builders FirstSource, a manufacturer and supplier of building materials. This is another blue chip stock that has performed incredibly well during 2023 with a staggering return of 130%. Lastly, he invested $39 million into PTC, a software company that helps businesses accelerate digital transformation. PTC just reignited its growth with 18% year-over-year revenue growth and has phenomenal margins. Its gross margin is around 80%, which is some Andrew Huberman morning routine healthy, and moreover, the company also generates net profits. To sum up, it seems like Stanley Druckenmiller chose to open positions in some of the best performing stocks in 2023. He chose companies that usually don't grow very fast but will generate solid free cash flows. Now, let's see what were his top 5 stocks at the end of the quarter. His fifth position, accounting for 6.7% of his portfolio or $237 million, is Lamb Weston. Lamb Weston is one of the world's largest producer of French fries. Seriously, this is a top player in everything it has to do with processing potatoes. However, the stock had a terrible couple of weeks as it dropped 17% following lower than expected earnings.
No! God, please, no! No!
Hopefully he bought insurance. His fourth position is pharmaceuticals giant Eli Lilly with around 9% of his portfolio or $250 million. This stock had a beautiful return around 50% for 2023, and moreover it just had a beautiful gap up following its earnings report for the second quarter, so Stanley Druckenmiller just made a lot of money with this one. The third position is Microsoft with 10% of its portfolio or around $280 million. Besides its incredible businesses of cloud and business processes, Microsoft is shaping up to be a top AI player after acquiring 49% of OpenAI, which is the parent company of ChatGPT. Since we saw how bullish Druckenmiller is on AI, it's pretty clear that he believes that Microsoft's efforts into AI will be successful and he prefers it over Google. Moreover, the stock had a decent year with 33% return. The second position with 12% weight and more than $363 million invested is the South Korean Amazon Coupang. This is the largest online marketplace in South Korea. Coupang offers same-day deliveries, fast grocery delivering. Coupang Eats, a streaming service and payment processing, but I want you to notice what's unique about his position. The market price is 50% below Druckenmiller's average buying price, so he probably lost more than $100 million on this position alone. But in spite of the underperformance, he kept adding shares of Coupang almost every quarter since 2021. One of the greatest investors of all times believes that Coupang can become the next Amazon, and while the company created a great customer-focused ecosystem, my only worry is regarding its concentration within South Korea with outside operations only in Japan and Taiwan. But Druckenmiller kept his faith in Coupang because of Asia's phenomenal growth perspectives.
The next 5 years or so, Asia looks a lot better to me than the United States because at some point we got to pay back in terms of productivity, in terms of higher rates, in terms of a lower dollar.
And now, finally, the creme of the crop, the number one position in Stanley Druckenmiller's portfolio, worth more than $400 million, is the most beloved AI play of the moment, Nvidia. Nvidia might be the perfect pick and shovel stock for the AI story. The market understood that AI will have a serious contribution in the efficiency of companies, and it rewarded Nvidia stock with a phenomenal 200% run for 2023. But what matters most for Nvidia is to go beyond the AI narrative and have a close look at its earnings. And Nvidia's earnings have been nothing short of spectacular. In the first quarter of 2023, out of the 500 companies in the S&P 500, Nvidia had the biggest upside change in its earnings estimates with a staggering 83% increase in its forecasted earnings. As a result, the stock had a massive 26% gap up. But what's really shocking is that in spite of the 200% year-to-date return and the massive gap up, the stock is now cheaper on a price to earnings basis than it was in May. So even if you're now paying 25% more for the stock, you're actually buying it cheaper than it was before the gap up. So it looks like in spite of the phenomenal run, Nvidia might still have a lot of room to grow. And that's exactly what Druckenmiller believes, since he anticipates that the stock might still offer good returns in the long run.
Nvidia bottomed in October. If this is a secular move, if this thing is real, you just don't have 10-month moves. That's not how it works. Even the dot-com bubble lasted 2.5 years. For many of the guts of the internet, it lasted 4 years. If I'm right on AI and the impact on it, I mean, it's already making the top coders 7 to 8 times more productive than they were 5 months ago. If it's as big as I think it is, Nvidia is something we're going to want to own for at least 2 or 3 years, not for 10 months.
To sum up, it seems like Druckenmiller bought stocks that performed well and that usually generate free cash flows. He's fully invested in the trend of AI, with 2 out of the top 3 positions being massive AI plays. Moreover, it's easy to see why he prefers Nvidia over AMD after their phenomenal earnings growth. If you want me to make a deep dive on any of these stocks, please leave a comment below and I'll analyze it. If you feel like you've learned anything of value and you want to see some more analysis like this one, please hit that like button and subscribe.